Welcome back to the channel, everyone, and thank you for tuning in to another great video. We are looking here at the ES futures, and I also have the NASDAQ 100 futures on a different monitor, kind of looking back and forth in between the two. What I have is my higher time frame. I'm only using this to take a look to see the direction of the market, as it stands right now. And we're currently making higher highs and higher lows. So with that said, I'll be looking for long entries to areas of demand on my lower time frame chart on both markets particularly. So if we're marking zones off of the higher time frame to wait for a pullback and then use the strategy what I talk about, break a structure off the lower time frame, pull back to an area of demand type strategy, then there's a key there's actually a demand zone resting right in this area here. We also have a zone below with its untested gaps at an area of demand on the higher time frame. But again, you can take trades on the lower time frame even if the market doesn't tap into a higher time frame. Say for example here, because we're pushing higher demand zone, you can look for demand setups on the lower time frame because we are already bullish on the higher time frame chart. So we are, if I squeeze things together, all right, for a full perspective, look at the market. We have this major high here resting up here at 84.5 or say 85, and then this low down here. So we're big leg right here. We're trading kind of dead smack at the middle of it. I'm just going to pull a fib retracement, guys. I don't trade fibs. I just want to show you that we're we're above the 50% area. We're around almost the 76% area. So I don't trade fibs. I'm just letting you know that when it comes to looking for opportunities to trade, you want to trade going short at the upper end, okay, and buy the lows. So you want to buy lows, sell the highs. But we're in between this leg here. Bigger picture, we could break structure to the upside, or we could fold, hit some area of, say for instance, supply in this area here, and then fold and break structure below, say 41.22, okay? But again, we are bullish on the higher time frame as it stands now. Why? Because we broke structure to the upside and making higher highs and higher lows. Now, again, we haven't tapped or pulled back into any key area of demand on the higher time frame. But still, because we're bullish on the higher time frame, we can look for directional plays or setups on the lower time frame at key areas of demand. Okay. Now, if we look at the higher time frame on the NASDAQ 100, okay, I'm pulling that over now. Same thing. We're bullish, guys, making higher highs and higher lows. So again, we can be looking for opportunities to do what? Go short. To go long. Okay. We just tapped into this area of demand right here on the higher time frame. We did reject it, but this was earlier part before the market opened up and I wasn't sitting in front of my charts. But this was a demand area right here. But either way, we are still tend to be bullish on the higher time frame. So on the lower time frame, you can look for demand setups as well. So let's see what unfolds here today. I'm trying to see if the market has really, we're tapped into this area of demand right here, but we've already tapped into it and pulled back to it once here, pull back to it again. So be mindful because the market may be trying to push lower and break through that area now. There is demand resting back down here at 887. But again, when price action is pushing lower, making lower lows and lower highs, if you're breaking structure down to the downside, and then we're starting to break into a swing, like right here, pushed up, made a high, higher low, and broke higher. This is an aiding swing or a swing that participated in this area of breaking structure to the upside when the market was moving higher, okay? If it takes out this area right here and taps into this area of demand, the small area of demand right here, you got to pay attention because the market is breaking into an area of structure, breaking into a swing, okay, and taking out, participating or aiding areas or swings that aided in the breaking structure here if it's moving lower here. So you got to pay attention to price action and understand, even though price taps into this zone right here, the moment it does, like right here, what's resting right above it, Is there going to be resistance right above it that can stop it? So you got to pay attention to price action. A lot of people have a hard time reading the market and really following price action now that they may understand supply and demand. They're so stuck on, this is a demand zone, but they failed to understand and read price action when it was coming back to that zone, what took place, And then once the market again taps into it, we're right above that it could possibly stop at or pause at, or reject. So, yeah, you could look for long positions off of the lower time frame. This is my entry chart, my 12 range chart. But whatever charts you guys use, whatever works for you, it could be time-based charts, if you're trading a 5-minute chart, whatever. Just trade that, whatever works, whatever you're used to and have experience trading with. It's universal, supply and demand. So understand that. Doesn't matter the chart style or chart type, I should say. So, basically what I'm waiting for now, what could happen here, we could get a breaking structure, to the upside. Market starts breaking structure back to the upside. It's going to have to take out some areas. There's let's see here, like right here above this area here at 949 or 950. Structure break here and start breaking these areas or levels. There's areas of structure above, and then you can look for pullbacks to go along because we're still, overall appear to be bullish on the higher time frame Nasdaq 100. Okay, so, but right now I don't see any clean areas to really take a trade from going along. I mean, I'm not saying that it can't reject in these areas here, but these areas are already tested. It's not part of. I trade my strategy and stick to it. And there we go now, breaking structure on the higher time frame down below. So working at test, I marked this red line here. The low for today, well, if you trading ETH, electronic trading hours, is below here, 892. This is taking into consideration both the Asian and the London session. So it's electronic trading hours. But anyways, there is a area here that the market could come back to, but you got to pay attention again, like I said, price action above. Okay. All right. And it looks like the market may be trying to come and test that area. So we'll see what happens. So now that we're, breaking structure to the downside, there's opportunity to possibly look for short entries because the market is pushing lower. So, all right, the market's moving a tad bit sideways here. So, I'm going to wait and see what happens. All right, let's see. I got to a trade real late here, guys. So, hopefully it follows suit here. Come on. Runs back down, down to the downside right here. Come on. Look at it. Okay, got filled there. I'm only trading 2 contracts right now because we're kind of moving sideways here. I'm just scalping. And, I typically trade 2 contracts anyway unless I see like a real great setup that I want to get in on. And then I may bump it up to 3 or 4 contracts. But we're moving sideways now right now. We are bumping up against, this area right here, little supply area right here on the higher time frame. So the market, you can see what it's doing on the higher time frame, is moving sideways. But this was a pullback to an area of supply right here on the lower time frame chart. Okay, so okay, now it's breaking up to the upside now. So let's see what it does. Let's see what it does. Let's see. Yeah. All right, let's see. I'm not sure if it's, nobody knows for sure what it's going to actually do, the market's going to do. Is this just a deep retracement to break structure back to the upside? Or is it going to make a new lower low to the downside? Just have to wait it out. As of right now, we haven't rebroken any area of structure back to the upside yet on, if we get this move back to the upside here. So, the market could turn around and start doing something like this right here. Whoops. Like this right here, to where it starts breaking these areas here above. And that's how it moves, It does its ebbs and flows, and then it may eventually want to break structure up here. Or it may just, let's get rid of that. Or it may just, turn back around. It could break right here and then turn back around and say, oh, we're going to move lower and break structure right here. So you got to pay attention very closely to the structure of the market, follow the swings when it comes to price action. Just look at everything all together. Let's see what the market's going to do. It's going to, start to make these higher highs and higher lows. It could test this area here and then come down and test this area below. So small area of supply resting right here off the 12 range chart, my lower time frame. It's starting to break back into this area of structure right, or the swing right here. taking out this little bit of structure right here, or internal structure. So look at there, we're like 1-2 ticks away from that area. So I'm not sold on it yet. What it's going to do, again, it could come down here and test this area here. All right, now it taps it. So I'm not sure. Again, I don't know if it's going to try to push lower. Right now, it's in a channel to the upside. So be careful here. Or at least for my sakes, I'm going to be careful here to kind of see what it's going to do. So I'm not sold 100% what it's going to actually. Okay, now I'm going short. Taking the market back down to this area here. Come on. Let's see if we can get the break below now. I'll get a market come back down to this area here for, at least. Let's see what's going to do here. Come on. It starts to show me signs that it wants to move higher than I'm getting out. I'll close the trade out. Look at it. Come on. Come on. Look at it. 2 ticks away and it pulls back. That's not what I want to see. May have to take this trade out. There it goes. That's what I didn't want to see. I don't know what it's trying to do here. So we're testing this area. I'm taking out. All right. Taking out. It's just moving sideways in this high volume area here. So I'm going to take what I can get. It's probably going to run down here to at least 915, 916 area. But, it's moving sideways right now. So this is a very tricky. Yeah, see? Okay. All right, there it goes. It came down here to what, 916 and 3/4. So it's trying to push higher, looks like. All right, so I got out that trade. Being smart enough to know when to exit, okay? I really should have gotten out when it came back and closed probably right here at 23 1/4. But it came up for a second chance, came down, and I took my profit there. Just luckily, So let's see what happens now. I'm going to wait it out because it's kind of in a channel now to the upside on the lower time frame. So if you pay attention, this is what a channel looks like. High, higher, low, high, higher, low, high, higher, low. Just moving to the upside here on the lower time frame. But on the higher time frame, we're bearish because we broke structure right here. We broke some area structure to the downside. So this is a leg right here. This high, this is the low right here, but it's the high and the low of this leg right here. So I don't like to trade, primarily at the bottom of a leg, or in the middle of it, if I'm going to look for areas to go short. But you can if you start to see the market break structure below, and then it makes continuation of break structure below. So say break structure here, right? And then what you did, broke structure there, pulls back, break a structure below. Again, you look for pullback to a key area of supply. Okay, that's how you do it. All right, so on the ES, trying to see here. We hit this area of demand right here, but you gotta pay attention though, because you got resistance right above. So I'm not taking a long into resistance. That would make absolutely no sense, even though the market is, what am I trying to say here? Is it's moving to the downside here, breaking areas of structure below. So be careful about that. You probably want to be looking for shorts on if you're trading the lower time frame on the ES, okay? Again, pay attention to your higher time frame, because on the higher time frame, we're still bullish on the ES, okay? For sure. All right, we're not like the NASDAQ right now, kind of breaking structure on the higher time frame. And but a lot of people would try to stick to this trade and looking at this one chart here, and you don't want to do that, okay? You got to pay attention to the higher time frame too. If you got experience and know what you're doing, you can look for quick scalps, count on trend trading, whatever the case is. But as I always state, the best thing to really do in trading is trade in the direction of the higher time frame. If we're bullish on the higher time frame, then look for bullish setups, long setups at areas of demand on the lower time frame, the 12 range chart, okay? So, but because we're bullish, I ought to be looking for setups to go long on the higher time frame chart. I mean, excuse me, on the lower time frame chart, guys, not the higher time frame. Yeah, this was a demand area right here, but you got resistance above. So be careful with stuff like that. I mean, what I like to see or do is possibly look for maybe a break of structure above here and then a pullback, to go long. All right. And then, because the market is bullish on the higher time frame, look for a pullback to area demand and hopefully take the continuation to the upside and looking for price to break structure above here at 45.41. Okay, I'm going to go for a quick little scalp here. Just quick little scalp back up to the top up here. Come on. Come on. There we go. Quick little scalp to the top there. Just pull a little small little pullback, small little area demand here. Moving to the upside, making higher highs and higher lows. 3 small little scalp entries on the NASDAQ. I'm just trading the 12 range chart. Yes, I'm going long, even though, the higher time frame is pushing. Well, we had a break of structure below. So, I say I'll be looking for shorts, right? Well, I'm taking long entries because I'm seeing what's going on and we're making higher highs and higher lows to the upside. So we're breaking structure to the upside pretty much. Well, not breaking structure to the upside. We're making continuations of break of structure. This is a break of structure. This is a break of structure. This is a break of structure on pullbacks to small areas of demand. So I'm just scalping off of those because it looks like we are, just making higher highs and higher lows. And we haven't broken through any major or key area of structure back to the upside, but still I'm just scalping very quick scalps on the lower time frame. On the higher time frame, yeah, we haven't broken any key area of structure, but if you got experience and you know how to trade the 12 range or the lower time frame chart, you can do so for short little scalps. But be careful because you have to know where to get out at because we have areas of resistance above us where the market can stop at. So when I took this little pullback right here to this zone right here, little demand zone at 934, I knew it would come back at least swipe the tops right here, grab this little area of liquidity right here, but we got resistance resting over here where it could butt up against and stop. All right, so now we are breaking higher, as you can see here on the NASDAQ, just chopping to the upside. So we'll see what happens. Excuse me, guys. So, we could break above these areas here. This will be a break of structure above on the higher time frame, above 73.5. Now on the ES, we're still, we're still bullish, very bullish on the ES. All right, so let's see here. Market's running to the upside on the 12 range chart and it's pulling back here. It did. If you look at the 12 range, it looks like we're breaking structure to the upside. The lower time frame, higher time frame, we're not really seeing that, but the lower time frame, you see it breaking here, so it's breaking structure to the upside and pulling back. This right here was an area of demand, but again, this is a stopping point right here where the market can once it rejects this area, stop it, because for one, you have resistance right here, okay? You got to pay close attention to price action. When it was moving back down below, tapped into the zone, boom. Yeah, you can go long like right here, but you're only going to be able to take this long possibly back up to maybe around this area here. So let's say you got in, I don't know, at 40. Let's say you got in at 40. You got maybe 3 points on that trade right there on the NASDAQ. So you got to be careful. You got to look above you and below you wherever you're taking your trades from to make sure there's no major areas of support and resistance below. That's key. Very key. So this is a tricky type situation here. So we'll see. Market pulls back to maybe here. I might look for a quick little scalp short. We'll see. Or it can come back up here. So I'm just going to wait it out. Wait it out. Maybe here or here. But it's got to be careful. Got to be careful. Why? Lower time frame. What I'm seeing now is market's breaking structure back to the downside here. We have, making lows and lower highs to the downside. This would be a pullback to a key area of supply right here. It didn't come back there. So it did pull back to this area of resistance right here. Okay. So, and now it's bouncing to the downside. All right. So what's it going to do? Is it going to follow suit now and want to take out this area structure right here on the higher time frame at 905? Possibly could. If it do, then maybe we could look for a pullback to go short. Not on the higher time frame, on the lower time frame. So let's see what takes place here. Now we got this leg to the downside here on the 12 range chart, breaking a bit of structure to the upside, bumping up against. This is an area of small area demand, or excuse me, supply right here, but we got support right below us. So be careful, be careful. Pay attention to price action as it is retracing and returning back to areas of supply or demand. This case here, an area of supply resting right here. Okay, there's an area of supply resting up here as well. You know, so let's wait and see if it taps into this higher area of supply right here. Then I gotta be careful and look for areas of support right below, because there are areas. Let's see if it pushes higher, or wants to try to. Yeah. So right now it's moving sideways. Okay, moving sideways. So we wait. All right. So I'm going for a quick stab short here. It didn't tap my zone, so I gotta be careful here. Okay, I'm just going for a quick little stab short here. Yeah, I need to be careful here. I need to get this trade. Yep. I need to get this trade. It's not a good entry for me right here. Let me get out. Okay, I see. Yeah, I need to be careful here. Okay. Market can bounce right here with this high volume. No, it is. It's a swing right here that took out this internal area structure right here. So be very careful, because it already broke back into this swing right here. So I got out of that trade there because I quickly saw what was taking place there. All right. So that's the thing I talk about. Get out of the trade if it's not working out for you and you see something real quick, as I did. All right. People are always talking about, well, you show every little trade that you take is a winner. Look, I just showed you I get out of my trades quick. If they don't work out for me, something doesn't work, I'm in and I'll get out. If I notice what took place, and I saw what took place, it was breaking back into this area structure right here, okay, on the move to the upside, and I saw it. See, it would have went against me. All right, so I saw what took place there. It pushed up, pulled back, broke higher, took out this little area of aided instruction, what I call aided or a helping swing that aided in the structure break to the downside. Okay, it broke higher, tapped into this little supply zone right here, and right below me is support. I need to get out. I saw it when it came back and it pushed up, and I saw what was taking place, and I saw this swing sitting right here. I got out quick. I said, no, I need to get out. So that's why I did that. That's why I got that trade. Now, yeah. So, what's it doing here? It may run back up to the top up here. It could possibly, but there's no void or gap down here below. It could reject this area right here below this high volume, know where it's at, and push higher. But I'm not 100% sold. So I'm just going to wait it out, to be honest with you. So I'm showing you my trades as I'm taking them. I've only taken 3 little small scalps, you know, nothing big or major. The market's not really doing much on the 12 range. Some people like to revert to maybe a slightly higher time frame, maybe a 15 range, maybe even a 30 range, but to look for entries. I love the range charts because they give you possibilities and loads of setups. You know, waiting on a 5-minute setup, I'm not saying it won't work, you know. If I was to pull up a 5-minute chart, this is a 5-minute chart of the NASDAQ. Some people may have a hard time, you know, with these big wicks and stuff, understanding and looking at price action. Not saying it can't work. Like right here, there is a major supply area sitting up here at top at 94 on the 5-minute chart, right? Okay, I can see that, right? The market pushed lower. You know, this could be on a 5-minute chart. I'm not saying, you know, it could have been a long, but I don't see a gap or area void back to the, you know, to the area right here when it pulled back right here. Below us, if we look at here, there is a demand zone resting down here around the 87.5 area. I'll take that back. I'm sorry, guys. Let me take a look again. I meant to bring this down here. This is actually a demand zone right here. down here at around 52, around the 50 area. So there's a major area of demand on the 5-minute chart. For those that may trade the 5-minute chart, I don't do that. I'm just showing you, examples. I can see it on the 5-minute and see it on the time-based charts, but I just prefer to trade the range charts because they're just cleaner to the eye to me. That's all. All right, so getting back over to my charts. Higher time frame, we still look kind of bearish to me. Just temporarily, this could just be, the market retracing back deep to push higher, but it could come back down and break below here at 905 or 904. All right, but what I want to say, because people always get confused, they look at me trading, my range-based chart, my lower time frame, and I talk about me trading specifically from that. I do so because I've got so much years of experience. I know how and what I'm looking for on my charts, because I've been trading the same charts for years. But what I talk about to those that are inexperienced or beginner traders that may be moving over to trade, similar to the way I trade, trading supply and demand, back testing and using the same strategy and using range-based charts, take the higher time frame range chart, okay? Mark your zone from that. And first and foremost, trade in the direction of the higher time frame. When you move down to your lower time frame, trade in the direction of the higher time frame when you're looking for your demand setup. If the market's moving higher on the higher time frame, then trade looking for long setups on the lower time frame in the same direction. Vice versa, move to the downside on the higher time frame. Look for supply setups on the lower time frame. It's as simple as that. Stay and move and take your trades in the same direction as the higher time frame, and that's going to put you in a safe net area. It's going to allow you to position yourself and set yourself up for better trades. Okay. Now, if you're more experienced and you know how to trade counter trend, then that's fine. Just be careful. There are tons of people that have experience and they know how to take trades like I do, and counter trend trading against the overall direction of the higher time frame. But I'm not telling anyone to do that who does not have experience and know and what to look for, okay? I can look at this right here just on my lower time frame chart and take trades in between what's going on, all right? All right, even though the higher time frame is showing that right now we may be looking kind of bearish, a slight turn to the downside, but I can still look for long entries on my lower time frame. I'm not telling you guys to do that. I'm just telling you, what I show so much in regards to the strategy about higher time frame, trading to the upside, wait for the pullback to a key area demand on the higher time frame, then move down to the lower time frame, wait for a breaker structure on the lower time frame to the upside, then pull back to a demand area on the lower time frame and take a shot when you get the rejection. Because you're moving in the same direction on both charts. Multiple means of confirmation, multiple means of confluence. All right, so maybe I'm not sure. Maybe the market's not going to try to run to the upside and take out this area structure here to the upside on the 12 range, and then we can continue making, breaks. This is what the market looks like on this leg. If you look at the higher time frame, you really don't kind of see it that way, right? You don't see all that choppiness or all the little swings. 12 range is what it looks like. That's that high that we see right here. So the market could run back up to the upside and break that area structure to the upside here. We don't know yet, okay? We just got to follow, kind of trade what we see, all right? It did break this area here, so the market may be trying to run higher now. Ooh. I may have missed the opportunity here. Let me see. I think it's trying to run to the upside here. Okay. Yeah. All right. I think it's trying to run higher here. Oh, let me see something first. Yeah, maybe to this area here first. Okay, I'm just taking a quick scalp here, guys. Not paying attention. Let me take a look at something. Could pull back a little bit. Yeah. I don't like what I see here. So I think I'm going to take a quick scalp here. I think I'm going to get out this trade because I don't like what I'm seeing right here. Yeah, let me get out this trade. I'm getting out right here at the highs. That was a bad entry on my part again. It could run higher. I see where it's kind of filled some gaps already. Yeah, there it goes. Okay, so my entry was right. I was correct, but I saw that some of these gaps over here on the move to the upside, or this leg right here to the downside right here, in between these candles, these little fair value gaps had already been kind of tested back and filled back. So, oh, here's an area right here. I didn't, okay. So it's probably going to at least test 68. 68. Okay, I didn't see that because you got to blow your chart up. See, there it goes. Okay, my trade was right. I was just looking for areas to where once it pulled back right here, this was an area of demand right here. So let me mark this on my chart for myself. See, even I'm not perfect. Okay, nobody is. All right, this was a long entry, a area demand to go long. Take the tops here. Let's say you got in here at 56, okay? Look, you could have got at least 63. I should have gotten to that trade. I got into it late because I wasn't paying attention. This is the reason why when I'm making these videos and trying to trade, guys, it's hard enough to sit here and try to do this stuff and focus 100% in your own zone without, any chatter, any noise, and then I'm making a video on top of this. So please, guys, just please, provide me some opportunity and thank me for what I'm trying to do while I'm trying to show you the trades that I'm taking. It's not easy. It's not easy. So look, that trade I got out on, that was a beautiful run to the upside. I should have stayed into it. Got spooked out because I didn't look quick enough over here to see, what it needed to fill back into. Okay, what areas or was there any gaps that it could run back to the upside? But this was a clean slate right here. Okay, all right. All this was an area of demand right here coming back to the downside, but there were, these gaps in between these candles here that the market had to run back up to and fill. It had already broke above this area here at 961 right there, okay? When it ran to the upside here, all right? Pulls back, okay? And then when I saw it starting to break structure back to the upside within this swing here, all right, as we were breaking higher, it had already broke above this area here at 61, there was a huge possibility it was going to run up here and fill in any gaps or voids that were still resting there. So now we're breaking structure above here, okay, breaking slightly above here, all right? So this could be a continuation run to the upside. We don't know 100% yet, but it could definitely be so, okay? There is a area of supply resting right here, okay? As well as we got it back into the top here, so be careful about those areas as well. This is on the higher time frame though. But right now, we're slightly breaking above an area of structure to the upside here on the 60 range chart. And yeah, the market could pull back to this area right here, around 44. So we'll see. And then continue pushing higher. Or it can reject where it's at, okay? Where it's at now and push lower. You got to pay attention and just stay glued to what's going on. All right, so let me see here. I'm not paying attention close. This could be an area right here. Okay. And, okay, I'm going short, I'm going long. Come on, baby. I should have waited for this break of the candle to the upside here. I didn't do that. You guys saw that. And it tapped into this demand zone right here. So I'm into this trade a little early, but that's fine. I'm looking for it to break up to the upside here. Come on. Push up. It's coming back. This is not what I want to see. I want to see it keep pushing higher. Okay. Come on. There's demand right below it too, so it may not, this could be a failed area. See right now. Come on. I'm taking out. Yeah, there we go. It's going up there. Okay, I'm taking out because it was just right here when it got up here and started filling in these little gaps here. Red candle closed. The next one came down. Kind of doing a sideways action right here. I want to see a quick move to the upside here. And it went up there. It tested the area I was looking for. But you got to also be careful too because this was when the market broke structure here to the upside. Just giving some pointers and tips. This was a swing to 80 in the break right here, right? Okay, there is demand here, but there's also demand, untested demand right here as well. So you got to be careful there. There's also untested demand here as well. So, and there's also a major area of untested demand right here. The market can test each one of these areas, guys, is what I'm trying to say. So be careful, be careful, be very careful. You see any signs where it's not moving quick enough with momentum once it tests a, say for example, this demand zone right here. Okay, that demand zone right there, it breaks above, right? And then it starts to fold to the downside, and you get a close of a red candle to the downside. Then the next close of a red candle below to the downside. That's when I'm typically going to get out the trade and preserve my capital and get out quick enough without it even coming back to my area of thresh, my stop loss, what I'm trying to say, okay? Whether you trade with a mental or a hard stop. Most people are going to have a stop sitting back here below, right here at 58, 59 area, maybe a few ticks below that, right? Okay? It moves up, and then red candle closes, and the next red candle closes below that. You get out before it taps that stop loss, so that way maybe you got at break even or a few ticks below that, and then preserve your capital. So it didn't come all the way back up here and tap right into this area right here at 71 or 72 right there. It went back up and started filling some of these gaps here, but be careful because we made a lower high right here, pulling back to this area of demand. So it may say, hey, we're not going all the way back up here. We're going to run it lower and start testing some areas of below, okay? All right, so look what it's doing now. See? Now this could be, let's see, this could be a liquidity grab right here, and it might want to pull higher now. Or is it going to come down and push lower and start testing some lower areas? Yeah, this is what I talk about, not trading the upper portion of a leg on a pullback, okay? You want to trade deeper within or to the downside of a leg, okay, where the move started at. And, sometimes the market's going to reject zone. It rejected this zone here, okay? And it didn't go all the way back up here, all right? Of course it didn't. All right, this was a lower high. It went back up there to fill some gaps, whatever the case is. So is this an area of demand? I mean, supply right here coming to the downside? Yeah, but we haven't broke structure. We here we did, coming down, pushing down, pulling back, and pushing lower. We haven't broken any area of structure, within this leg here when the market started coming back down yet. I believe now we are. Yeah, now we are. We're breaking structure. We just broke below this area right here. So let's see what happens here. Slight area of structure right here. Just a very slight area. So the market's moving sideways. If you look at it on the higher time frame, we did get a break here, slightly above, but not a lot of push in one direction or the other. So, yeah, be careful here. So I'm going to stand down right now. I mean, this could have been a short right here, but still, looking at the higher time frame, yeah, you got to be careful. Let's see what happens when it comes back to maybe this area here. This is a demand area on the higher time frame, so we could get a bit of rejection there. Let's see. All right, so the market tapped into that higher time frame demand. You can see was resting right here. Mark it right quick. This area right here, it's a higher time frame demand zone, and let's go down to the lower time frame. It's this area. Let's go ahead and blow it up. I'll put it place it on all charts so we can see it on the lower time frame as well. Right here, see? This is the higher time frame demand zone. Pull us back. Wait for the breaker structure above, say on the lower time frame, and look for a pullback to go long. Okay, so I got in when I saw rejection in this area here. Now it could come back and it could actually test lower areas, but my aim is for price or the market to run up to and test the high of this right here, this leg right here to the downside on the retracement. So test the highs up there around 72, 73 area. And because we have resistance there, so let's see what happens. It could actually come back and test lower areas, guys. When I say lower areas, they can come back and test this area down here. All right. So I got to be very careful here. I got to trade a little late here, but really what you want to really look for is opportunity down at the lower end where the aggressive buy-in took place to the upside here. Okay, that broke the area structure. These areas here are just areas of supporting swings that took out structure as it was moving higher. There's little lower, excuse me, higher highs and higher lows. See it coming back against me right now. So I gotta be very, very careful here. The only reason why I got in because price came back to this area here and I started seeing it reject and not wanting to push any lower. And so I got in on the trade to go long. But it can come down here and test this area down here at 39. Okay, this is a demand area where the aggressive buying started off at on the move to the upside. So moving sideways now on the lower time frame, and I'm just praying that the market moves higher now. So this is more of a bit of a riskier trade for me because first, this was not a untested or area where there's a gap avoided at a supporting zone, and it's already been tested. So I'm taking a bit of a stab here, going long, and not waiting for it to test this zone here. Okay, the untested or area where there's a gap avoided at, only because I saw price come here and start to do this kind of, what most trading gurus or would say that's a W structure, okay? If you can't see it with your eyes, I kind of paint it for you a little bit here. See that? W structure, all right? Showing signs of rejection, kind of wicking at the bottom there, and then moving higher. So I'm going to stay in the trade, and hopefully it doesn't pull back too far against me, guys. I got in late on the entry, to be honest with you. I got in up here. More so should have got in right here if I was going to take the trade. Well, it's a good area to get in at because, waiting for the break of I guess if you want to call it the top end or base of the W formation right here above 53. But still, the market can push lower. So it's moving sideways now. I think it's going to push higher. Just got to kind of wait the storm out and see what happens. It's 11:30 almost Eastern time now, 11:25. So this is the time where I'm typically out of the market because the market likes to change its direction, okay, or do something different. So I'm gonna weather the storm on this one here, and this is gonna be my last trade on this video. And because it's kind of moving sideways here, I may take back out. I may go ahead and take out right around here. I think I'm going to if it tests it again. Come on, test it again. About 8 points. Yeah, I'm going to take out right there because it's tested here again once. So I'm going to go ahead and take out. I'm not saying it won't continue pushing the upside because it looks like it wants to try to. But it's at a high volume area. We've already approached that 11, right around 11. Already approached the 11 o'clock time frame. We're pushing 11:30 now. And it looks like it still wants to push higher. But I'm going to go ahead and get out because I just don't want to take the risk right now with it kind of moving sideways right here. And then it drops down here and tests this area here. So this was a setup, like I talk about, higher time frame demand. All right, higher time frame demand right there. All right, price breaks above on the lower time frame. It's the lower time frame. Breaks above an area structure. Wait for a pullback to a key area of demand. This honestly would be the area for the what am I doing? Demand right here on the lower time frame. If it comes down here, okay, and look for rejection to take a long entry, okay. Again, the breaker structure took place. Price pulled back. This area right here. I wasn't interested in taking a trade right there, but when I started seeing this rejection right here, I went ahead and took a trade, just scalping it back up to the high right here, pretty much. So I think that's about an 8 point trade there on the Nasdaq. So hopefully you guys picked up some pretty valuable tips within this video here. Again, I cannot stress it enough about trading in the direction of the higher time frame, okay, on your lower time frame chart, okay? If the higher time frame is bullish, look for longs. If it's bearish, look for shorts. Do not trade in between an area, okay, the middle of something. I say that because it's a bad area to trade from, first and foremost, okay? But, the strategy of how I trade primarily and what I look for, the best setups is when the market is tapped into, example here in today's video, a higher time frame demand zone. Look for the breaker structure then on the lower time frame to trade a demand zone off the lower time frame, okay, when it pulls back. That's as simple as that, okay? As simple as that. You'll find some of the best opportunities and setups work in your favor when you do that, okay? But outside of that, if you're interested in joining the Discord, find the link down in the description portion of the video. You can also find the link in any of the videos, okay? So find it down below. Click on it, invite yourself in, come over and join us and be a member of the Discord community. It is free of charge. And you can come over to the trading floor channel on the server and join in. You know, we post, lots of us traders, we post our screenshots or our entries over on the Discord community for fellow members that are maybe trying to learn and understand, possible trade entries from other community members, okay? As well as we have a general chat channel where we communicate and talk to one another, conversing. If you have questions, maybe you're interested, have questions about the future markets. Most of us trade the indices over on the Discord server, so come over and join us. Find that link, click on it. All right. Also, if you're not a current subscriber, what are you waiting for? Go ahead and click on the sub button today, okay? Because the information, what I share here on the channel is free, okay? I give a lot of valuable information that has transformed and helped people's out, okay? If you don't believe me, come over to Discord and ask. We have people who are using the same strategy and how I trade and finding success, okay? It just takes patience. Patience is key. Understand that. But what's most important is understanding market structure. What's most important is understanding price action, because without those, you won't be consistent in your trading. Please do yourself that favor and understand and learn market structure, okay? So please subscribe to the channel. Make sure to turn on all your post notifications. And last but not least, please drop a like on the video. I'm out, guys. I'll see you in the next one.